Republican sweep of the election results was certainly a surprise. My reading is that the Democrats tried to make it all about Trump, and the voters cared more about issues such as illegal immigration and the failure of pay to keep up with inflation. Although climate change wasn't a big issue, the election certainly showed that people aren't interested in the obsession Democrats show on the issue. I'd say the biggest failing of climate extremists is that there's no cost-benefit analysis. The planet is warming and sea levels are rising. How this impacts the climate is less clear. But sure, let's do some things to manage the risk. The International Energy Agency thinks the world should devote 3 to 4% of annual GDP to renewables and other projects to lower emissions. But the most pessimistic forecast of the economic damage from climate change are a 20th of that or less. Climate extremists and progressives basically believe that no amount of money thrown at the problem is too much. It's a dumb way to make policy. The election results are a slam dunk for the energy sector. The dumb pause on LNG export permits will be lifted. We'll have a more coherent regulatory structure. We'll probably see an uptick in production. An investor the other day worried that drill baby drill is going to open the floodgates with too much oil, depressing prices and hurting the energy sector, just as it did last time Trump was in the White House. But we think financial discipline has taken hold. It's no longer about production growth. It's about growing per share earnings. It's about generating a return on invested capital above its cost. So we think you'll see continued financial discipline combined with pro-business regulation. U.S. exports of liquefied natural gas are going to double over the next 5 years anyway, but now we'll see additional projects reach final investment decision. The EU is already talking about buying more US LNG in exchange for a break on the tariffs that Trump has promised. This would be in everyone's interest. The fundamentals just got better, and valuations remain attractive. Leverage has been falling so that investment-grade pipeline companies operate at around 3 times debt to EBITDA, down from 4 to 5 times 5 years ago. Dividend yields of 5% are easily covered by distributable cash flow yields of 9% and higher. Meanwhile, payouts are rising. Targa Resources recently announced a 33% hike. Cheniere raised theirs by 15%. Companies are buying back stock. And best of all, for the discerning investor, inflows into funds in this sector remain low and are often negative. Although I have to add that we're growing because we tirelessly tell the positive story. In our opinion, there's never been a better time to invest in U.S. pipelines. There is no irrational exuberance, just assets that churn out growing cash every year, with a substantial portion of those cash flows hedged against higher inflation because of the pricing contracts common across the industry. American energy is a huge success story. It's about to get bigger. Don't get confused by all the hype over solar and wind. We've added far more energy via natural gas than renewables in this country. The natural gas energy transition is the only meaningful transition going on, and it's being led here in America with a government that's going to support it. If you're interested in learning more about the energy sector and interest rates, then don't forget to subscribe and follow us on LinkedIn and Twitter. Our handles are in the description box below. To find out more about what we're thinking, you can sign up for our twice-weekly blog at sl-advisors.com. We always love to hear from you, so if you have any comments or blog ideas, please leave them down below. I'm Simon Lack. Thank you for watching this video.